All right, today we're going to talk about adding a really crucial piece of equipment to your financial toolkit. I'm talking about life insurance. We're going to break down how it can be the bedrock of security for you and your family right here in Canada. So let's get into it.
I know, it's a direct question. It might even be a little uncomfortable to think about. But you know what? It gets right to the very heart of why we're talking about this today. It's all about protecting the people you care about most from financial chaos when they're already going through the worst.
So let's start with that idea of a foundation. I want you to think of life insurance not as just another bill to pay, but as your family's financial safety net. It's the one thing that's there to catch them if the unexpected ever happens.
At its core, it really is that simple. It's a formal agreement. You pay your premiums, and in exchange for that, an insurance company makes a promise to pay a chunk of money to whoever you choose when you pass away. And here's the really important part in Canada. That payment, the death benefit, it's tax-free. That is a huge deal.
Now, of course, it's not a one-size-fits-all situation. The Canadian market has different tools for different jobs. You're basically looking at three main players: Team, Whole, and Universal. We're going to break down what makes each of them tick so you can figure out which one fits your life.
First up is term insurance. You know, the absolute best way to wrap your head around this one is to think of it like renting your coverage. You get that protection for a very specific amount of time, usually when you need it the most.
So, how does this renting thing actually work? Well, you pick a period of time, a term, say 20 years, maybe to cover you while your mortgage is high and the kids are growing up. For that entire 20-year period, your payments are locked in. They don't change. If you pass away anytime during that term, your family gets the payout. It's clean, it's simple.
So what's the trade-off here? Well, it's pretty clear. The huge plus is that term is by far the most affordable way to get a really big amount of coverage. It's not even close. But the downside is just as clear. The coverage ends. It's temporary. It's pure protection, so there's no savings account built into it, and if you want to renew when your term is up, you can bet those premiums are going to be a lot higher.
So who is this for, really? Well, it's a perfect fit for covering those big but temporary responsibilities. You've got a 30-year mortgage? A 30-year term policy is a fantastic match. It's also the go-to for young families who need to make sure a lost income is replaced until the kids are grown and out on their own. It's all about getting the biggest bang for your buck over a set period of time.
Okay, now let's switch gears and look at a totally different approach. If term insurance is like renting, then permanent insurance, well, you guessed it, it's like owning. It's built to last your entire life, and just like owning a home, it can build its own kind of equity over time.
And there are two game-changing features with permanent insurance. First, the coverage never expires. As long as you pay your premiums, it's there for life. Second, a piece of every payment you make goes into a special savings or investment account inside the policy. We call this the cash value, and it grows tax-sheltered. It literally becomes a financial asset you can tap into while you're still alive.
Now, this owning model really comes in two main flavors. You've got whole life, which is all about stability and guarantees. Your premiums are fixed for life, and the growth of your cash value is guaranteed. Then you have universal life, which is built for flexibility. You can often adjust your payments, and you get to choose how the cash value is invested. That means a little more risk, but also the potential for much greater growth.
Okay, let's just pause for a second. Everything we've discussed so far, it all pays out after you're gone. But what about a tool that can protect you and your finances while you're still living? This is where we get into something called living benefits.
Seriously, think about this for a minute. Medical science is incredible, right? Surviving a major health crisis like a heart attack or cancer is thankfully more and more common. But surviving often comes with a massive financial price tag, from being unable to work, from extra medical bills. So how do you protect your finances against that?
This is the tool for that exact job. Critical illness insurance works differently. It pays a tax-free lump sum of cash directly to you if you're diagnosed with one of the serious conditions that's covered in your policy. This isn't about dying. It's about giving you the money you need to focus on recovery without financial stress.
And we're not talking about obscure conditions here. The policies cover the major health events that unfortunately affect thousands of Canadians every single year. We're talking about things like cancer, heart attack, and stroke. The exact kinds of diagnoses that can completely derail not just your health, but your entire financial world.
So the real point here is, this money buys you options. It buys you freedom. The freedom to take a year off work to recover, to pay for treatments that aren't covered by your provincial plan, to hire help around the house,
or to just keep paying the mortgage so you can put 100% of your energy into getting better. It acts like a firewall for your life savings.
So we've laid all the tools out on the table: term, whole, universal, and critical illness. Now we get to the most important part. How on earth do you choose the right one for your life's blueprint?
Let's just bring it all together for a quick side-by-side comparison. As you can see, it all comes down to your goal. If you need the most coverage possible for a specific period of time at the lowest possible cost, term is your tool. If you're looking for guaranteed lifelong coverage for things like estate planning, you're looking at whole life. And if you want lifelong coverage but with that added flexibility and growth potential, that's where universal life shines.
And look, if you only take one single thing away from this explainer, please let it be this: there is no such thing as the best insurance product out there. It just doesn't exist. The only thing that exists is the best tool for your specific job, for your specific financial situation. It is 100% personal.
So, what do you do with all this information? Here's a simple little roadmap. First, just take stock. Who relies on you financially? What debts do you have? Second, think about your bigger goals. Are you trying to leave a legacy? Third, be real about what you can comfortably afford. And finally, with all that info in hand, you can find the perfect tool for the job. So we'll leave you with this to think about. You've seen the tools, you get what they're for. Now take a look at your own life. Which tool does your financial toolkit need right now to help you build a more secure future for yourself and for the people you love?